What's going on, everybody? Michael and Coco here to do some technical analysis on the financial markets. Today, we're going to be looking at the S&P 500 and a couple other sentiment / breadth indicators, just kind of see where this market might be headed next. Let's get into it. All right, welcome back. First thing is first, let's talk about this Tuesday turnaround or turnaround Tuesday, whatever you'd like to call it. But we plotted this out and kind of planned it out on yesterday's market brief. We discussed more about what I'm personally doing as far as strategy goes for my long positions. We mapped out a rising wedge on the 2-hour time frame, and we said if it can get up into that range where the 61.8% fib level is, or the previous resistance, we could very well potentially see a pullback. And almost instantly, once it reached up to those levels, the president came out with a tweet basically saying that let's cut this stimulus off until the end of the election. And then up until the end of the day, or just after the end of the day, very interestingly enough, he's just, is agreeing with Jerome Powell about that we do need more stimulus right now and Congress has to act. So I don't know if this is political grandstand or if we're just kind of some sort of negotiation method. I don't really know. All I know is what I can do, and what I can do is look at the technicals and start looking at major areas of support and resistance to plan my trades around. So with that said, let's go ahead and hop into the daily time frame right here for the S&P 500 and kind of just talk about what's going on right now and where this could potentially go to. So first off, we had a falling wedge, and then we broke out of that, and we were tracking that. Now it's kind of forming a rising wedge and or bear flag. So you can name it kind of whatever you want. The previous couple days here, so it's been going for the last couple weeks, or 3, 4, 5, 6, 7 trading days. We've been really going sideways, right? So we opened here, we closed there, and then we're pretty much right back where we started 7 days ago. So really just sideways action, but it's been very volatile. As you can see, we've saw big run-ups here, then we saw a big drop, and then we saw a big run-up, and now we're seeing a big drop. These last 2 days, this is what's called just a bearish engulfing, right? So we moved all the way up. That right there is a complete outside trading day candle, complete bearish engulfing, ran into the confluence of this 61.8 fib level. It didn't quite get there, but it did reach the top upper part of this trend line and then got rejected. And then if you look to the left, we ran into obviously resistance right here. We broke down, we back tested it, so right in that area. So that makes sense. However, we are still within this channel, this pattern. So tomorrow is an important day. Right? We don't know what's going to come out, but what I can say for sure is this market is being driven right now by uncertainty and by news headlines. So it's what's tweeted out. So we have stimulus kind of dangled out in front of us. We don't know when it's going to come or if it's not going to come. We had the president say that it's not going to come till after election. Wall Street threw a temper tantrum. This is what happens when that kind of thing takes place. If we did get this stimulus deal, there definitely should be some sort of relief rally. So we got to keep our eye on the ball there. We're going to be looking at a couple key levels today, and I'll show you here on this time frame and then also the 2-hour once we get a little bit more into it. But we need to continue to trade and just proceed with caution in these environments. You can just tell by looking at these candles. It's just saying right now, hey, we don't know where the market is going, so we're just going to trade off where we think it's going to go that specific day. And as you can see, we just go boom, ba-da, boom, ba-da, ba-da, boom, boom, boom. And that's what it is. It's as simple as that. So you can either try to guess where the market's going to go, or you can just proceed with caution. So if we break down from this 38.2 fib level, it's very possible we can have a double bottom and retest 3,200. Okay, we're going to have to see some movement to the downside. As I'm looking at this, it looks like it wants to do that. However, it's still within this pattern. So we can very well gap up tomorrow, and then push a little bit higher and then potentially retry to test that 61.8 level. It's a very big possibility. If the market is certain that it's not getting any stimulus, I think that October is setting up for itself for more of a downdraft. That'd be my personal take. So we will see. But the key levels that I want to look at right now, clearly today's trading day, it went pretty much all the way up to 61.8, the 34.42 level, right? And then it also came right down here and bounced a little bit from 38.2. So it is trading within this pretty tight channel from anywhere from 33.25 up to 34.50. So if we get a break above that, I think that we're going to head higher. If we get a break below that, I think we're going to head lower. So What we need to watch for is a break of this bear flag and or rising wedge, and then the next test would be right here at this double bottom. If we have some sort of contested election, or if there's more bad news that comes out, it's very possible that we break through this double bottom. So we pull back, and now it looked like a double bottom, but we'd be breaking through. It looks like this just big box right here would be a very good position to go long in. I'm still technically bullish the stock market. However, I am playing with extreme caution. So I'm playing with low beta stocks in the utility sector because that has been performing, and I'm looking for buying those specific dips. Now, if we start getting breaks, and when we reached up here, I said that I was looking at specific charts, such as Peloton. I think Peloton's overextended. Yes, the fundamentals are good, but the chart itself was telling me with a negative divergence, being oversold, it looks like it wants to pull back. And I said if it gets up to the 61.8% level here on the S&P 500, it would make sense to go in short for Peloton. So I did. I took a small short position, nothing too crazy, because it's very likely that we just get blasted right back up, and I'd have to just hard get stopped out. So we'll see how that trade goes. I'll follow up with it in a couple of days. But 3,200 is going to be the level we're going to keep an eye on. And then right here at 31.13 currently to 31.25, that'd be the next level. It could go lower, but keep in mind we have the 200 period, which will be a strong area of support. We have 3,000, which is a psychological level, and then we have some previous resist or support here right in this level too as well. So this zone right here, if the price comes down here, I will be putting more of a risk on position, which means I would be taking a little bit more larger size positions in the stock market. It could continue to go lower, but we would just have to watch that as time continued. But my game plan right now, the first spot was right here. This would be the first long position. I was playing 3,200. It reached within $10. And then as you can see, we pulled there and we bounce right up. I feel like if we can get down here, we're going to see a very similar, very similar type situation. So that's what we're looking at right now. The pattern is still in play, this bear flag or rising wedge. We got to see if it continues to coil up or if we start to break down. And it really depends on how we close. So, like I said, we'll see how this one goes. The key levels, though, are where you really want to pay attention to. Let's look at the 2-hour time frame. All right, so here's the 2-hour time frame. This is the one that I've spent a little bit more time on yesterday's market brief. And just look where this came up to. So this was, boom, we were climbing within it. We did technically have a technical break of this. So on the daily time frame, it doesn't look like we did. This, I could potentially adjust it a little bit, but it does look like we broke down from this. So, but look where it came up to. Boom, it touched this box just perfectly. Didn't quite reach to the top of the trend line that we drew out or the 61.8, but it did tap in right here perfectly. And then boom, that's when the news around, waiting on the stimulus came out, and we just saw the next 2 hours just boom, crash right down below. So are we going to see a continuation to the downside? It's possible looking at this from a technical perspective. But there's some key levels out here still that we'd have to get through. One, we have this gap right down here, so we can very well just come to 33.10, fill the gap, and then bounce higher. We could very well pull down to the 50 period. That's kind of right where this is. Maybe extend a little bit, and then we bounce up back up to 38.2 and then head lower. But we'd have to play it day by day to see where where this price action really wants to go. But if you wanted to play a dip, buy the dip, or an intraday trade, you can look down here on the 2-hour time frame, let's call it 3,300 or 33.10. You can play right there at 33.10. If we get a pullback there and then a bounce from that point, you can probably capture on some good profits. Have a hard stop, because if you do get down to 33.10, you want to stop below this fib level right here, because if it starts breaking below that, we could just see a big just movement to the downside. So it's likely to see bounces from here because they're key levels of support, just like it was likely to see resistance up here because they're key areas of resistance. Once support is broken, it then becomes resistance. So if we were to break this level to the upside, this 61.8, I would imagine that this area would act as a strong level of support. But we'll see if it can reach there, right? Here is the Nasdaq 100 on the daily time frame. Very similar type kind of setup right here. We broke out of this channel. We've been going sideways, and now we have an outside trading day, full bearish engulfing right here. We closed below the 50, and we also did that on the S&P 500. I forgot to mention that, and below the 5 EMA. So we're still above the 20. If we get below the 20, I don't see why we couldn't head back down to 11,000 here soon. But we got to get through 11,200 first. That's a level of support. You can see right here it was resistance, and now it's holding it as support. So if we crack below 11,200, I would imagine that the next level is going to be 200 points lower until we see some sort of bounce. Now, if you look at the MACD did have a bullish crossover, but it was still below zero at that time, and now we're starting to kind of see it die off again. So if this gets rounded off and goes back below zero and has a bearish crossover, that could bring the trend continue to move lower. On the 2-hour time frame, clearly we're struggling to get above 11,500 or 11,600 right here. And we broke through this channel and we said that the target could be right up in this way, or right up by this pink box, 11,750, but it didn't quite reach there. Now keep in mind, there is a gap right here. And it's right by a 50-period moving average. So it's very possible that we see some support in this area. So you're going to want to trade this with caution. If we break below that, we could see the flush lower. But as I see it right now, we still have a 50-period moving average. That's support. And then we have this gap window that can act as support when it's closed. We did lose the 200-period moving average, so that is not a good sign there for the bulls. But, we'll see how the futures markets opens up, and we'll see really how the stock market reacts to all of this tomorrow. We're going to need some more data, but as I see it right now, this is still a risk-off type environment, and you want to proceed with caution. The VIX here on the daily time frame is still holding within this pattern. Now, if you kind of see right here where the VIX has been trading since September 14th, we've been just within this channel from, just above 24 to 30. So we've been just kind of bouncing back and forth within this channel. And it's kind of forming this inverse head and shoulder. So if we start breaking above some of these key levels, for example, if we get above the 200 period, we can see a spike to the upside around to 34. But if we start cracking above this 36, then we could see even a bigger move to potentially around 45 to 50 on this inverse head and shoulders. So pay very close attention to this. The VIX did get really punchy today, but it is still pinned between the 50 and the 200 period moving averages. So, we also have this gap here below us, which, has been bugging me for a very long time now. But, we'll see what happens with that. But as I see it, this pattern is still holding up. Here's probably the most important chart to be paying attention to, and that's the US dollar. We've been saying that this is kind of forming a cup and handle, and originally we said that it broke out of the channel, formed a bull flag, boom, broke out of the bull flag, and now could be potentially forming another bull flag. But now we're looking at it as a cup and handle because it kind of makes sense. Now, this can get very, 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 very punchy. It can move to the upside if we break above this kind of line right here, this 23.6 fib level. So we're going to have to watch for this because technically speaking, this looks absolutely perfect from a technical perspective. Yes, we came up. This was previous support. Now it's acting as resistance right here. Just perfectly, boom, and now it's moving lower. We kind of saw a nice move today. This is a bullish type engulf, well, not quite an engulfing, but this right here is a kind of reversal type looking setup. So if we start breaking out of this trend line, look what happened last time that took place. Right here, we had a little bit of a fake out, but once we did get above it, we saw that movement to the upside. So if we break out of here, we can start seeing this move up. That's going to put more pressure on gold, silver, and the stock market if the dollar rises. It's just going to happen. If we get above this level, I would imagine this 38.2 level, or just say 96 would be the next level to capture. If we get up to 96 up here with the dollar, I for sure believe that the S&P 500 will be moving down to that 3,000 to 3,100 range. So keep an eye on the dollar because this is all telling right here. If you look at the RSI on it, it looks like it wants to start crossing over and head lower. But keep in mind, it's not fully below zero. It's kind of just right there at zero. So we'll see here what wants to happen. We've had times where it crossed, almost crossed over, but then came up, and then almost crossed over, and then came up, and then almost crossed over, and then came up. So we'll see here. If we start getting pressure to the downside, then yeah, I think that we'll still see a run continue in gold and other assets. So here is the regional banking, the regional banks ETF, KRE, and you can look at the largest U.S. institutions too. We'll go there shortly, but first off, this is on the weekly time frame, and we broke down. This was bearish, and then we kind of just got this kind of relief rally to the upside, and this candle right here is an inverted hammer candle. That does not look good. We saw one right here, and then we saw the movement to the downside. Mind you, the week is not fully over, so it depends on where this closes. Now, if we get more push to the downside and close back below this lower trend line, that's going to be just one big, just inverted hammer very negative looking type candle for the week on the banking index, and that could really send this this ETF a lot lower, which is not good for the overall markets when the banking and the financial sector gets pulled down. The 10-year yield today did take a little bit of shot down. We saw the move up to about 8, and then we saw the pull back. So this is still, I mean, technically a breakout move. So either we're coming back in for a false breakout, or we're going to just kind of see some move to the side and potentially a little bit higher. Now, keep in mind the context, right? It's a bullish trade. We boom, shot up to the upside, but it's in overall bearish context. So there's going to be a lot of pressure to the downside. If we start seeing this head lower, then we got to monitor that day by day, because that can also have a negative effect on the markets as well. Here is the TLA. So this is the iShares 10 to 20 year bonds. And typically when you see yields go down, you can see bonds go up. This is the bonds over the SPY. So the higher that this ratio moves, it means that the bonds are outperforming the SPY, which means that people are seeking risk-off investments when this ratio goes up. Now, we've been in this bearish trend, and today we saw a spike to the upside. I don't know if this is going to continue or you kind of get hung up here by this moving average. This is a 13-period EMA. So we'll see there, but if we do start breaking above it and getting continuation to the upside, that would indicate to me that there's more people moving into bonds, less people kind of just outflowing, more people coming out of the S&P 500 or risk-on type investments. So we're going to have to monitor this one day by day, week by week as well. But as I see it right now, we saw that little spike up. Still has some room to go, though, in the risk-off environment. So the sentiment is kind of, iffy at this particular point in time. I do find this interesting right here. This is the Pring bottom fisher. Very good indicator for finding market bottoms. As you can see, when the blue line crosses above the green and they start both moving up together, you can see that it kind of finds bottoms in the market right here. On the March pullback it did. We had a pullback right here, and then we kind of came up. Then right here, said the same thing. And then right here, very similar, we saw that ramp up. And what do we see going on right here? Well, we're below the 10 line right here, this black horizontal, and then we see the blue line crossing very closely above the green. So they're just about intersected. The green is still sloping down, and the green is a little bit of a lag time. It's a 10-period moving average. So this is not I found the bottom yet, but it kind of looks like, hey, that's why today was so weird for me. I saw the big pullback. It makes sense, and it was basically off of that news that we saw. And, it's going to be interesting to see how this plays out, because I do see this big uptick. And every time I look back, I never see an uptick then a move down, other than just very, very few times when it was above this 10 line. But when it was below it, I don't see it. So maybe I have to look more into the history of this to see if this has happened where you saw a tick up and then a move lower to the downside. So I'm not putting too much weight on this at this particular point in time. It is just one indicator, but it is still worth noting right now, because it could very well signal to us, hey, no, yeah, it might go lower, but this is kind of finding its bottom before we kind of get a relief rally to the upside. So we'll monitor that one. Here is the NYMO. This is the breadth indicator, the Mcclellan oscillator. We did see a pull back. Still a positive breadth in the market. I want you to pay where this S&P 500 is, the SPX. This is still holding a support from going back here to early March, let's call it, and then to June, and the trend line kind of follows through. It's bouncing and holding right within this area. And this all looks very similar to what happened in 2018, where we saw the S&P 500 pull down. I've been saying that, but we saw in 2018 also hit an all-time market high on a negative breadth. Then we saw this spike to the upside and then a spike to the downside. And what we did see in 2018 was we saw it do a double bottom. So that means if it does a double bottom, it'd bounce at 3,200. We saw a run up higher, and then we saw a pullback to even steeper place. So if it acts like it did in 2018, I don't know if it's going to do it play by play, but so far it's pretty much play by play. But that means we would come back to 3,200, see some sort of bounce, get rejected, and then head lower. So we'll monitor it. We'll see what takes place. But like I said, this is all just a high risk environment, very uncertain. It's the election year. It's October. We just came out of September, relatively bad trading months. So if you're banging your head against the wall, like, I don't know why my trades aren't working out, it's always choppy, this or that. You need to step back from all of that and kind of understand that, everyone's going through the same thing. The market is uncertain, so you're getting the choppy weather. So how do you feel good about these environments? Well, one, you reduce your position size, and then you trade on sectors that are performing. Speaking of sectors that are performing, utilities on the weekly time frame right here, we see this big spike up. Okay, this is the weekly time frame, still confirming the move that utility sector is performing, and utilities is something that investors move to be more risk off. So the XLU, this is over the SPY ratio. So the higher this ratio goes, that means that utilities are outperforming the SPY, and we've seen this on the matrix before. Utilities are doing well. So it's our job to look at the utility sector and the stocks that make up it, and we look for areas of opportunity. On my weekly scan, I went through 3 utility stocks that I like the setups for. Each one of those stocks performed today, even when the market took this big fall to the downside. They were short-term affected, so I did exit out and sell some shares when I was up there. But overall, those shares ended positive for the day, and I didn't get whipsawed back and forth because they're lower beta, which means they don't move quite as fast as some of the higher beta stocks or these tech stocks and various other stocks that are extremely volatile. So it was a very relaxing day despite all of this craziness in the markets. I'm going to quickly go over gold and Bitcoin today. I'll do silver another day, but I want to kind of keep this somewhat short, shorter than it's already been kind of overextended in my opinion, but let's get into gold. I'm losing train of thought here. Overall, we haven't broke above this trend line yet. Not only do we have to break above this trend line, but we have to recapture the 50 period. So I'm not convinced that gold's going to be going higher until we get above 1950 and can hold it for a couple of trading days. As I see it, this right now is putting in lower highs. So we're just bouncing down these staircases, moving lower, which eventually could very well lead into a breakdown. Now, if we get below 1850, yeah, I think that we're going to be retesting this zone out here, which is 1770 up to 1815. It's very likely. This right here, this candle, we went down pretty far, but then we saw somewhat of a bid recapturing 1900. But overall, it doesn't look super strong at this particular point in time. We're going to have to see what happens with the dollar. Number one is going to be very important. Here's a chart of Bitcoin. We've been just watching it trade within a channel. Not much going on here other than it's putting in lower highs. So it's kind of taking stair steps downwards until we start breaking above 11.2 and holding that. Then I'd say, yes, we can go higher. However, it's just been going sideways. There's not much action taking place. If we get below 10,000, I think we're heading lower. Right now, the trend says we're headed lower just by looking at the overall context. We're below the 50 period moving average. It's been holding as resistance. And then we have the 200 now kind of sloping up into this. So it's going to be a fight between the 50 period and the 200. It's going to be interesting to see how this kind of pinned price action works out. But overall, we had this big drawdown. Now it's kind of just, tracking sideways. You can even call this a symmetrical triangle. You can say it a bunch of things. But if we start cracking lower below 10,200 to 10,000, yeah, look out below. We can head definitely down to 9,500. That would be probably the next stopping point right by the 200 period moving average. All right, so just to kind of wrap things up, just to reiterate my narrative again, this point in time within the market and coming into October, if you find yourself just getting whipsawed and not capturing good moves in either direction, that's, welcome to the club. That is what happens in uncertain environments. We kind of just trade within channels and we get very erratic price movements. So it's very hard to determine where things are going to go. So my narrative is always look for major areas of support and major areas of resistance and play those levels. So if you wanted to take that approach, you can basically go short at a very major level of resistance. You can go long at a very major area of support. And you could play the internals of that trade. And if it goes higher, you can scale out of your major position. If it goes lower, you can scale out of your major short position. It's just a very simple trading method, but it allows you to play one intraday trades or tighter swing trades within a massive channel, and it allows you to hold long positions just in case if it breaks in either direction. So you kind of get a taste of both sides, and depending on how you scale out of the positions, it can really help your portfolio. As I see it right now, me personally, I'm seeing the utility sector outperform the majority of the SPY and the other sectors, and their lower beta. So I've been in this risk-off move for quite some time now. I mean, not really that long, but I've been in a risk-off move, and I continue to hold that until we get some certainty. If we pull down to 3,000 to 3,100, I will be switching my narrative then. But until that point, I'm just playing it very safe. That's all I have for you on today's market brief. Sorry it got out to you guys later, but it is what it is. I also have a full-time job, so that comes first. All right, see you later.